Singapore has narrowed its full-year growth forecast for 2019 to a range of 0.5 to 1%, while the economy posted better than expected growth of 0.5% on year in the third quarter. Q3's GDP performance was also better than an earlier official estimate. The Trade Industry Ministry says while global growth remains weak, there are signs of stabilisation. And Brandon Tanoto tells us more.
MTI says there are indications that the electronics slowdown may be easing. And according to some economists, the electronics cycle may have even bottomed out. Although the biomedical and aerospace manufacturing clusters saw robust growth in the third quarter, a continued contraction in the electronics cluster still weighed down the manufacturing sector. The manufacturing sector shrank 1.7% on year, but moderated from the steeper decline in the previous quarter.
It does look like the worst might be over for tech for now. We have seen, exports of semiconductors at a 7-month high in October. That it doesn't mean that spring is around the corner already, but perhaps there are signs that there is demand out there, and we have seen sign of investment as chip makers are reporting a bit of a pickup on equipment sales.
MTI and economists say the sector is poised for positive growth, driven by, for instance, demand for technology needed for the rollout of 5G mobile network services. This will also support growth in export-related sectors like wholesale trade, which dragged the services sector in the third quarter. Services growth came in at 0.9% on year, a drop from the previous quarter.
For the remaining quarter of the year, MTI expects the performance of the manufacturing sector and trade-related services sectors such as wholesale trade to remain subdued in view of the ongoing downswing in the global electronics cycle. However, sectors such as construction, information and communications, finance and insurance, and education, health and social services should continue to post steady growth.
The construction sector expanded by nearly 3% on year. MTI says growth should be sustained in the coming year because more than half of the construction demand is coming from the public sector. Looking ahead, MTI expects Singapore's GDP to range between 0.5 and 2.5% next year, led by an improving growth outlook for emerging markets and developing economies. However, it cited lingering downside risks like the US-China trade tension. Given this outlook, one economist expects the labour market to remain resilient.
Not only companies are hiring, people are also looking for jobs. And those who are looking for jobs get hired. Despite the slowdown, labour conditions are likely to be tighter, hopefully, into the next year, and that could also mean that disposable incomes may rise further.
Now, the Monetary Authority of Singapore said the central bank's move to ease monetary policy back in October remains appropriate, and that the monetary stance in the upcoming April policy meeting will depend on how the economy evolves as well as the updated assessment on inflation.